Good morning and welcome to 2011 and November the 11th and the day the 11th. Not often we see all the ones line up like that, and yeah. Also, the Profit Keeper should be okay to be downloaded now. Look, I haven't tested it, but the developer said that it's ready there. So, but like I said, I haven't tested it. But if you've got the patience, download it and give us a little bit of feedback on how it's working. And I'll have a check over the weekend. Okay, so looking at the US markets here, the Dow on a 30-minute chart here, we've had this impulse wave down through here in 5 waves. We're looking for an ABC counter trend, and this could be the A, the B and the C wave to here. The 61.8 retracement level for the Dow Jones is the 12,000 here. The market's it's 6:30 at the moment. So the market's still got another hour and a half to trade. So look, this subgroup 2 in here would be important here, the 11,872. So locking under that would probably send it to the downside. The Dow has had and normally does have higher retracement levels above the 61.8 here, so it could come even up through here. So we'll have a look at all the other markets as well. Just looking here through, this is the Dow Jones on a 4-minute chart, and just looking at that rally there. So from this low here, it appears that we've got up for 1 and back for 2, then 1, 2, 3, 4, and 5 here for the third wave. So we've basically got 1, 2, 3, 4, 5 here. I'm just doing this quickly for the A wave. This, so the A, the B, and the C wave here. It's a little bit sort of dodgy here. Maybe this is the C wave in here, up for 1 and back for 2, up for 3 and back for 4 and up for 5. That could be the top of it there. But also just bringing in the levels as the psychology, because the large numbers like the 900 here would skew things somewhat as well. But what we can see here on another level is that this was resistance and now it's becoming support. So until this support fails through here, we don't chase the breakout, but the retest is more important, as you know. So look, if this locked under this 72 here, this subgroup 2 locked under here and couldn't get up, started falling from there, then that would be your short. But while this is the support region through here, then we have to consider that this can move up to the 61.8 retracement level. This distance here is the same distance as this first structure coming up through here. So normally there is some equality in terms of the A and the B and the C. So anyway, let's just let that sort of play out there. One of the important things that I mentioned in the early bird this morning in the tech side of it is that on the S&P 500 here, this is the 4-hour chart, the midpoint here, the 1250 here is, as you can see, is a bit of a line in the sand. So I just call that the balance line. So being this as support or resistance would give us the sort of sentiment and what side that we should be on. As we can see at the moment, it's been vibrating across this here, but now from that range high and that range low there and that range low there and this range high here, it's kind of like a triangle pattern, really, isn't it, moving into that number, basically. So that's something that we could work with to keep things in a sensible manner if we get a bit sort of emotional and not sure what to do. So, but that was the range. Now this is the range here. So we should see a bit more activity above and below this here, but we should see it, tend to swing to one side, have a bias to one side of that 1250 there. So let's keep an eye on that, and that will get our long trade from that or our short trade from that. It's simple as that. The Elliott is suggesting to the downside, and we can work with that, and we are working with that. And but we want some confirmation now on this, So we'll see how we go. But we've got down for 1, back for 2, down for 1, back for 2 into here somewhere, or even higher. the supply levels over here where the volume would have been over here. So we'll see that hit, but it'll still be more working across here perhaps, and that's what we should be patient and work out a little bit through there. So this is going to be our sort of religious guiding light, so to speak, and we'll just allow that some time to develop. So that's a very strong point we can use there on the on that move coming up through here. This is the last move down on the S&P 500. It's on an hourly chart pretty much. We're looking for the A, the B, and the C here. So the 61.8 retracement level would be somewhere up here, but the 1250 here, as you can see, is really holding it down there with the supply there. So any effort to be above there, then we just need to allow it to play out from there. If it comes down here too much, then you know that then it's weak, and we can look for the short there. So if we're right in our wave count, the next move down will be a third wave, and it'll come down quite strong. The UK market has got its own little balance line in here, and that's the 5,500 through here. And once again, we're looking at this as an impulse wave to the downside, 5 waves, nice third wave in the middle, the fourth and the last little 5 waves down through here. And we're looking for the ABC. Now, what we don't know if this is the A, and we're getting a B wave in here, and then the C wave back up. So we still need some more time for this to play out. Sure, you can use the 72 here to short from this point here, but just keep positions a little bit small if we're gunning for that there at the moment. The our local market here, the ASX 200, the SPY rather. Okay, so pretty much same sort of scenario. We're looking at this nice 5 waves that we're looking at yesterday, and then we're looking for a retracement level. I just put the first one in here at the 72 number and the supply here, but overnight, while the Dow and other markets are falling into play, we're watching a larger A, B, and C move up to here. So that wave 2 now can come into this position here, but I still don't know if this is just an A and a B and a C to make the A wave, and then we get an A and a B and a C to get the B wave, and then we get a C wave back up. I don't know that just yet. That's why the 1250 on the S&P 500 is really important. Now, the base metals sort of govern our market a fair bit. So if we look at, we'll just jump the gun here a little bit. If we look at the copper market here, this is the copper market on a 30-minute chart here. We've been seeing this move to the downside, and this is the move down. This is still unfolding to the downside, so there's still a lot more bearish to come in through here. So I'm thinking that this will, keep the ASX 200 pretty much under that 43.30 here, because when you're dealing with a number such as the 4300 here or the 42, the larger number, then when you're dealing with these large numbers, you always have to include the levels on either side of that. So subgroup 2 here and subgroup 1 here as well, because if it found support on 43.30, then we've got a bullish market in play. That's the way I see it. So but until that support comes in there, then we will stay with the bearish count there. And of course, this is a fair square sort of line in the sand here, but the cash market, when it opens, if the Dow is up when it closes on the bell at 8 o'clock, then of course the cash market will go up, but it's not, the SPY's not going to move up that much in relation to that. Yes, it will sort of move up, but it will pretty much stay within the 30 here. So there won't be much upside, but there could be potential for downside. That's the thing. If this 72 here becomes the resistance, then you want to short that as well, and that's a significant number here because that's got the 272 there, and when you get 772 or 272, that sort of those harmonious sort of numbers there, then just carries more weight, as you can see here. But at the moment, it's support, isn't it? We want to see that support fail, and we want to see it to become resistance again, and we can work with that. So the gold market is pulling back. I'll go to a smaller version here, and we're also getting 5 waves to the downside. So when we're looking at, if you have a look on the gold charts, you'll see this is labeled as the top, but we're also looking at this now as a 5-wave structure to the downside. So we'll see a counter trend and then another 5 down on this side as well, and that would be the same for silver as well. Silver has been lagging somewhat in its move higher through here, so I've just labeled this as a 5-wave structure for the A wave, a B wave, and a C wave to here, and then also 5 waves coming down through here as well. So the trend line still here that was support is becoming resistance. So you could use the 34 here as the Fibonacci 34 here. We've been mentioning some time ago about support and resistance. So if it becomes resistance this time here, you can look further to the downside, but give it some time, and it may even be better to see the weakness in this sort of area down through here. The oil is still pushing to the upside, and I've labelled this a little bit differently through here as well. I feel a bit more comfortable with this particular labelling in this case here. So we've got this as wave 1 here, back for wave 2, and then we've got the nice strong 3rd wave in the middle here with the 4th and the 5th here. If the Dow's going to roll over, and we've got that right, then this will roll over from the 98 here. I think I put 99 is the closing price there, so sorry about that. You always have to check the closing prices for yourself because the market's still trading, and sometimes I get it wrong. So just trying to move swiftly through all the chores. So look, I'd expect this to still roll over if the Dow rolls over with it as well. And now it's got more of a complete wave structure, so I'm sort of happier with that. The currencies are pulling into line as well in terms of their wave counts. So we've basically had that nice wave up through here for wave 1. We're looking for wave 2 to come back at this point. Now we do have an A and a B and a C in here, but that could be a little bit small in relationship to this move that's happened through here. So we really need to sort of be aware that this little A, B, C here could just be the A wave, a B wave, a C wave here, or just the A wave to here, an A and a B and a C to here, then a C wave down, and then up from that point. So a larger A, B and C down to somewhere back into here somewhere, and then up from there. I know, just as we mentioned with the SPY on the 4272, that also here again we got all the 7s and a 2 here as well, so you can see this playing out through here. So this is a dominant little number here that we could use, and we are using. So I've labelled this morning, but then this is pulled back through here. So we still need to allow this to play. But if support is found on here, then we can move to the upside and also short on the euro as well. But do wait for support. The second step in the support is a 78.30, which is subgroup 1. So you'll need support on that number there before you can start dreaming of further upside there. But we've got a series of 1s and 2s to the upside now in the bigger picture, so we can expect that once this rally is done here, then further to the upside towards the 80 up there. And that would be the same for the euro on the flip side here, because the euro's in a series of moves to the downside, but the latest one, which you've seen last night, was the 5-wave structure coming down through to here. Now we're seeing the bounce here. Now, once again, this is the same as the stocks as well. I don't know if this is the A, the B, and the C to here, and that's the end of it. And then we've got 5 waves down, 3-wave counter trend, and looking for further to come down. So we use the 136 as the first resistance. The trade setup would be here at the 13572 and subgroup 2 here, resistance at the 72 here, then we'll be shorting from that point there to the downside. So if we can take a closer look on that, do I have any charts on that? Okay, so here we go, the 4-minute chart here. So you can see basically what's occurring here is across this 136 here, the price is vibrating across this level here in a series of corrective moves. So it certainly can develop as support. Once again, if it finds support on the top of group 1 here, then we'll look further to the upside and a larger correction. if the 72 here becomes the resistance this time around, then we can look to be short from that side there. So as with the US indices and the currencies, they just need a little bit more time to play out, then you can start taking positions in them. And it's good to play for the longer term, especially with the S&P 500 to the downside, and the euro will be in tune with the S&P 500 and the US indices to the downside as well, while the dollar will be the mirror opposite to that. And the Australian market as well, the AUD, we're seeing this is a 4-hour chart here, seeing this being pulled into the $1 area there. One's the strongest number, and it does seem like more like a little sort of fourth wave in here, doesn't it? Because we've got that little strong move down here, and we've got these, it depends how you count this corrective move in here, I guess. If you count that as down for 1, an A and a B and a C back for 2, this would be the third wave, the fourth and the fifth down to here, and we'll get a bounce off the $1 there, which is probably about right, really, when you look at it. But once again, on the 1-hour chart, same as all the Dow and other US indices and so forth, we've still got this ABC there. Is that ABC it? Or is that just the A, then little A, B, and C for the B, and then a C wave up through here? That's the question. So we need numbers to work with, and we can see that, if I can just go in here a bit further, no, that's going to be it. I need to update my deal book because I've got too many things happening on this program, so I'll download the new version today. So I'll have to stop the video there. But the point is that in this corrective move coming down, in this impulse move coming down through here, the question remains that is, with all the markets, is this little move here the correction, which I think is probably a little bit small. So we're still seeing it play out in terms of the A, a B, and a C wave through here. So there's a lot. There's probably a bit more to go, but we're certainly sort of bearish. But we just need them to play out a little bit further. So one of the key things, as I mentioned, is the 1250 on the 1250 on the S&P 500. So we'll use that as the main the main sort of line in the sand, and we'll continue over the next over the Friday session. So we could have the big drop on the Monday. That's why it's sort of important to work any positions in the market tonight. Today and tonight, because Monday is always known for a sharp drop. So it would be good to be sort of short at that point there, but we do need to see weakness and a thing to work with. So normally in the cycle, if the weekly cycle, if Friday's closing is strong, then it will follow through on the Monday. So if we get weak volume today, if we see lower prices today and if we see weakness today, then look to hold short positions over the weekend, because there's more potential for downside than there is upside. Alrighty. Have a good weekend, and I won't be here on the Monday. I'll do the early bird report, but I want to go to Sydney and have a look at the Picasso paintings there, so I want to do that on the Monday. So I won't be on the phone on the Monday, but the early bird report will be there, which I'll do on Saturday morning. Alrighty, good morning and good luck.